Broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. How are we doing today? If I can just get a quick audio and video check, let me know that we're coming through loud and clear, that you can hear me speaking and see my screen. Thank you, Mike. I appreciate that. All right. Hope everybody having a good trading day and a good trading week. And we're just getting back here from a trip to New York City for the New York Traders Expo. That was a great time. We had a good time at the show up there, and some good times there at the Nadex had a booth up there, so enjoyed getting to hang out at the booth a little bit and spend some good quality time with some of the guys up at Nadex, and good time. So if any of y'all are up there, I'm sure you enjoyed it as well. Nice weather and nice city to check out and have some sightseeing. So today we're going to talk a little bit about trading range-bound markets with Nadex binaries. For some of you, you may have, you may be a veteran trader of Nadex, and you may have heard me cover this strategy before. So for some of you, this may be very elementary and something you're used to. But for those of you that might be brand new to Nadex or just recently starting to trade, we like to go back every so often and kind of cover the basics, and we like to start off with the very basics of who and what is Nadex. What are Nadex binaries? What are Nadex spreads? Some top mistakes, top misconceptions, different strategies and systems, ways to trade them in different types of markets. And today we're going to talk a little bit about range-bound markets and how you can take advantage of those with Nadex binaries. There's multiple ways you can take advantage of them. We're going to focus today on just one particular strategy. So let's knock out our disclosures here. Trading futures options or any financial instrument involves risk, may not be suitable for every investor. Examples used are not recommendations to buy or sell, or a solicitation to buy or sell any futures, options, bonds, Nadex binaries, or spreads. Also keep in mind, guys, if I'm showing you the Nadex demo platform today and you see me enter any type of order, that's in no way trading advice or trade recommendation. That's simply me just showing you, visually some ways to, use the Nadex platform, use the Nadex, ticket entry, and, ways to help understand what it is I might be teaching you today. It's in no way trading advice, okay? And again, past performance is not indicative of future results. Any trading decisions you make are your sole responsibility. So, my name is John Skelton. I'm with apexinvesting.com, and Apex and Nadex, two complete different separate companies. Okay, Nadex is an exchange. Apex, we're an online company. We're a group of traders helping traders. We've got over 20,000 members. We've got strategies and systems, indicators, live trade rooms, stuff like that. A lot of our systems focus on risk management and probability. But we're traders just like you. We're a Nadex education partner here, but we trade Nadex binaries and spreads all the time, every day. And that's what we're here for, is to give you some free education of, who and what is Nadex, what are some of the different ways you can trade the Nadex products, and implement them into your day-to-day trading. I've been with Apex now. It's about 4 years as head of operations. I've got a background in banking and and as a licensed stockbroker. So again, I'm an educator, do these webinars for Nadex, do a lot of education for Apex, and we're traders just like you. So speaking of Nadex, if you're brand new, hop on over to nadex.com, and you can get some great information here on the Nadex website. Basically, Nadex offers two different products. They offer binary options and spreads. You can go through both of these tabs here, get some good general information about both of those products. Couple of things here. You can pop up here to market news, get some great ideas of what's going on with the market. What are some different things to be on the lookout for? Give you some good ideas to look ahead and maybe get an idea how you want to take advantage of those markets and figure out how you can potentially utilize the Nadex products for that. I got to give props to Nadex. They do a lot of education for their members. Not only do we do these live, webinars here, but you can go through here under the Learning Center. You can check out some different videos, trade examples. For future webinars, you can go right here to webinars, see what webinars are coming up in the future, get signed up and registered for those, and get email reminders of them. But if you've missed any of the past webinars, or you haven't been with us the past few weeks, you can go right here to Webinar Archive. Okay, these webinars are recorded, and this is where the recordings are placed. If you go right here under Filter by Presenter, and you just drop down here and find us, Apex Investing Institute, you can go back and you can see some of the past webinars that you might have missed. All right, and again, if you're brand new and you've never really even heard of Nadex binaries, you're still not sure how they work, well, some of the things we covered today might feel a little bit over your head, but just try to, keep up with us, take some notes. You can go back through this section right here, and you can watch, all kind of other strategy and system videos. You can go back and watch basic videos of, what is a binary, how do they work, from start to finish, everything is in here. Okay, you can go back and do some catch up. Right here under trading platforms, you can go directly to the online Nadex platform. They have a great mobile app for your Android smartphone. But right here under demo trading platform, Nadex will give you a free $25,000 demo account. If you don't have one of these, sign up and get one of these right now, even while we're on the webinar. All you got to do is just fill out your name, email, quick username, phone numbers, hit enter. In just a few moments, you will get an email from Nadex with a temporary password. You can use your username and temporary password to log into a Nadex demo account. Once you do that, you can go right up here to My Account. You click that, and you go right here to Settings and Password. That will allow you to change the temporary password they send you to a password of your choice. Okay, something easy for you to remember. But the Nadex demo platform is a great place to get familiar with Nadex, get familiar with the different instruments that they offer, the different, products and instruments they offer, different expirations. Great place to practice any strategies or systems that you're trying to learn. Practice them in demo, master them in demo before you move over to live money. You don't want to use your live money, practicing something and learning. That's a very expensive way to educate yourself is testing out new things with a live account. So test them out in demo, get familiar with it, master it, be profitable in demo, and then move over to live. So like I said, ton of props to Nadex. They do a lot for their members as far as free tools, great information, and free education. Okay, so today's subject, we're going to talk a little bit about range-bound trading, a little bit about reading the market conditions, how to pick the right binary strike, risk management and trade-offs, and what is a butterfly strategy. So that's the strategy I want to be reviewing with you today, is the very, very basics of what we call a butterfly strategy. All right, and for butterfly strategies, we use what's called in-the-money binaries. So we're not going to spend a lot of time on the basics of binaries today. Okay, this webinar will assume that you understand the basics of a binary and that you have a somewhat understanding of what an in-the-money binary is. Okay, but I just want to do a quick review of that very quickly here, just to set a quick foundation. And let's go on, let's pull up some binary contracts here. And let's take a look at the Wall Street 30, for example. Well, notice that we've got a lot of different binary contracts here. Each one of these different strike prices is a binary contract. And all a binary contract is simply a statement. This particular statement right here, okay, says that the Wall Street 30 will expire greater than 24/8/45 by 3 p.m. Okay, that's it. That's all a binary statement is. It's a true or false statement. Either that statement will happen or it will not happen. Okay, it's binary. It's 0 or 1, true or false, yes or no. All right. Let's go over here. Let's look at. Let me pull up some forex binaries real quick here as well. All right, same thing here. We've got a bunch of different strike prices here, right? Okay, and notice each one of these strike prices is different. Right here under the offer side, that's the price we can buy it for. Here's the price we can sell it for. Okay, so if I think that this particular statement is true, that the market will expire greater than 2206, then I might be looking to buy this binary. Okay, because I think the statement will happen. I think it will be true. And we know at expiration, a binary is either worth 0 or worth $100. So if I think the statement is true, I'd be looking to buy a contract, whether it's this one or any of these others, depending on my strategy. If I think this statement is false, I think, no, I do not think the market will expire greater than 2206. I think it'll expire at 2206 or less. Then I would want to sell. Okay, it's a simple yes or no. All right, now, if we know that binaries at expiration are either worth 0 or 100, well, take a look at the pricing here. We've got pricing here from $10.75, the 30s, the 40s, the 50s, the 80s, the 90s. We can kind of see 0 up here and 100 down here, as it were. Well, let's take a look at some of these right here. Look at this binary right here. And what does this statement say? That the market will be above 2198 at 3 p.m. Well, where's the market right now? It's at 2207. The market's already above this strike price, isn't it? Okay, this is already a true statement, as it were. It's just a matter of, will it remain a true statement? Will it remain above 2198 by 3 p.m.? That's what we call an in-the-money binary, meaning the market is already above that price. Okay, this says the market will expire at 2198. It's already above 2198. Okay, so it's an in-the-money binary. Notice again, you can see the same thing right here. This says it will expire greater than 2186. It's at 2205. Notice the pricing on it here. It's at $89. Well, at expiration, we know a binary is worth either 0 or 100. This one is already priced closer to 100, correct? It's a much higher probability that it will expire being worth 100 because the statement's already true as of right now. It doesn't mean the market can't turn around. What about some of these down here? Okay, why is this one priced so low? Why is this one priced much closer to 0? Okay, so it's only priced at $10. Well, because this says the market will expire greater than 2238. Right now, the indicator is at 2206. So it's got a long ways to move. Okay, the market has a long ways to go to get up past this. All right, so that's called an out of the money binary. So the market has a good ways to move for this statement to be true. That's why it's priced lower, because it's a much lower probability, as opposed to these in the monies down here that the statement's already true. The market does not have to move, right? Okay, let's kind of look at that on a chart here real quick. Let's take a look at something. Let's just say, for example, on this particular chart here, okay, let's say that I purchased a binary way up here saying that, hey, the market's got to expire greater than that. Well, that's going to take a lot for the market to get way up there, isn't it? Like the market has to move up. It's got to move up far enough, and it's got to move up far enough in time before my expiration, correct? Okay, so you understand why that would be priced much lower, yeah? What if I had a binary that I could buy down here for about $75, saying that the market will expire greater than this level? Well, the market's already above this level, right? So if the market were to go up, then this binary would expire profitable, worth $100, right? If the market just kind of stayed flat where it is, well, the binary would still expire profitable, okay? Because the statement just says that the market will expire greater than this. What if the market came down, 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 and came all the way down to right here and then expired? Well, it still expires above my strike price, so it's still profitable, okay? So granted, there's a higher cost, technically, and a higher max risk with this in the money binary, but I have a lot more options. The market can go up, it can stay flat, or even it can even come down as long as it doesn't go below my strike price, and that binary would still expire profitably. Make sense? For one of these lower price binaries up here out of the money, the market has to make some big moves. So if I were to buy a binary in the money for about, let's say, $75, I'm saying that it will stay above this price, okay? Now, let's take a look at something here. What if I were to look at this binary right here? What if I were to sell this binary, this particular one? What does this one say? That the market will be greater than 22.18. But right now the market's only at 22.07. What if I don't think it's going to go above 18? I can sell it and say, no, I think this statement will be false. I think the market will stay below this price. Well, if I sell this binary, okay, then I'm selling an in the money binary. Does that make sense? On the buy side, let's look at a different one. The market's moving here. On the buy side, this is an out of the money binary, right? Because it's a very low price binary way far away. But on the sell side, it's an in the money binary. Why? Because the market's already below this price. Let me draw that for you on a chart real quick. So in this example, different market, but if I bought a binary down here, I'm saying the market will stay above this price. Okay? Again, it can go up, it can stay in the flat, it can come down a little bit. As long as it stays above this price, that binary will expire in the money, because I said it will expire greater than this. What if, though, at the same time, I went in and I sold a binary up here? Let's just say. Okay? I sold a binary down here saying the market will not expire greater than this. That makes sense? So this one down here, let's say I bought for about 75 bucks. So I've got $25 potential profit. This one up here, let's say I sell for about 25 bucks. So I've got $25 potential profit. So what happens when I sell this binary? I'm saying that the market will stay below it. So again, the market can stay right where it is, and that's fine. As long as it stays where it is until expiration, this sold binary expires profitably. The market could come down. Okay, this binary still expires profitably. The market can even come up, but as long as it doesn't go up past this, then this binary still expires profitably. Make sense? They're in the money binaries. The statements are already true. So what happens if the market just stays? So what happens if I bought a binary down here, and at the same time I sold a binary up here, each giving me a potential profit of about $25 each? Well, what did I kind of do there? Well, between the two binaries, I kind of created a box for myself, right? A range. Remember, what was this webinar about? Range-bound trading. So as long as the market stays in this range, until expiration or by expiration, then both of those binaries would expire profitably. Does that make sense? Any questions, real quick, any questions on that particular part right there? I'm taking two different in-the-money binaries. One is a sell above, one is a buy below, and I'm creating a range. As long as the market stays in between that range, okay, then I would be profitable on both. Jason says, can we do this with at-the-money binaries? No, Jason, you really can't, because there's only one at-the-money binary. You know what I mean? There's only one, really one true at-the-money binary. Okay? I mean, at-the-money binaries, Jason, let me just clear some of this off real quick here. An at-the-money binary, let's talk about what an at-the-money binary is real quick. If we know at expiration, a binary is either worth 0 or 100 at expiration. Well, between now and expiration, where is the market at on this example here? 2208, okay? Well, look at these two binaries right here, 2210 and 2206. What would be right in the middle between those two? The current market, right? About 2208. Well, look here at the pricing. Notice how the pricing, if you looked in between these two, is right around 50 bucks. See that? When the market, when the indicative and the strike price are right about the same, that binary is going to be priced around $50. Why? Well, because it's kind of still on the fence, right? It could go up just a little bit and expire worth 100. It could go down just a couple ticks and be 0. Okay, so up until expiration, it's going to be right around 50 bucks. Okay, so when you're looking at all these different strikes here and all these different prices, don't get confused. What you do when you look at these prices, when you open a screen, find the $50 range right in here. Okay, cool. Right in here. What do you automatically know? That the market, 2206, is right around the strike price of 2206. Therefore, it's priced right around 50 bucks. Like that's where the market is right now. Anything lower priced than 50 is going down towards 0. Anything priced higher than this one is going up towards 100. So that's the at the money binary right in the middle. Anything below it, or in this example above it, but lower than price, is out of the money binaries. Anything above it is in the money binaries. So this doesn't have to be so big and confusing. If you take a quick glance at one of these, you find the 50 and kind of draw an imaginary line there, it kind of helps you understand of, okay, well, all I'm doing is doing that same thing here. Okay, right here where the market is, that's a $50 binary. All these other binaries down here on the buy side are priced closer to 100. Any binaries above it are priced closer to 0. Okay, and you can see that also on a binary strike ladder chart with Nadex. Okay, so Jason, for us to do an at the money binary, we'd basically be buying a binary or selling a binary, right about here where the market is now. Okay, all we're giving ourselves there is like a 50-50 probability. Either the market will expire above it and be, if we're buying, it'll expire above it, be worth 100, expire below it, be worth 0. We don't really know. Okay, we can't get an at the money binary up here and another one down here. That's just not how it works. Does that make sense? Okay, so that's why we're using, in this particular example, in the money binaries. Okay, because within the money binaries, what we're looking for is range bound markets to where we can kind of create a box like that. Now, but you set me up, Jason, because here's what I wanted to talk to you about. So if I sold one up here and I bought one down here, just as an example, okay? So on each one, so I'd want to sell one up here for about 25. I'd want to buy one down here for about 75. So on each one, I stand to potentially profit about $25 on each one, right? But that also means I'm technically risking what? What am I technically risking? If I find a binary that's worth about, that I can get for about 75 bucks, I'm technically risking 75 to make 25, right? So I could potentially make about 25, but I'm risking 75. Well, we don't really like those odds, do we? We don't like that risk-reward ratio. We don't really want to risk 3 to 1. We don't want to risk 75 to only make 25, right? Okay. We'd like to get closer to a 1-to-1 risk-reward ratio, meaning can I risk 25 to make 25? Everybody agree? Okay. So let me ask you this question. This binary right here, the strike price is $21.94. Notice it's priced in the 70s, because where's the market? 2202. Okay, so the market's way above it, right? The market's above it right now. But if the market came down and the indicative price came down to $21.94 before expiration, okay, If the market came down to 21.94, where approximately would this binary be priced at? We just talked about it. When the market and a strike price are right about the same, the binary is priced at what? About 50 bucks. Okay? Look at this one down here. Right now it's priced at $97, $96. But what if the market dropped and came down to 21.74? Would this still be valued about 96 and 87? Would it be valued up around 90? Or would it be around 50? Yeah, it'd be around 50, right? We know that. So let's look at something here. Boom. Right now, I sold this for 25. Remember in this example? What would it be worth right now? 50. So it would have gone against me, right? That makes sense? Okay. It would have gone against me because I was hoping to create a range here, remember? When the market was right in here. And I risked $75 up on this sell. But remember, I don't want to risk 75 to only make 25. So what do you think I would have done if the market came up, up, up like that and hit my strike? When the market hits my strike, and therefore this binary is valued at around 50, I would close that position. And how much would I have lost on that trade? Well, if I sold it at 25 and it's now worth around 50, I would have lost about 25 bucks. But how much did I stand to possibly make on that strike? 25 bucks. So what did we just create right there? A 1-to-1 risk-reward ratio, right? So we set up a rule of I'm going to look to do range-bound trading, which this market is not range-bound, okay? So don't be doing this. I'm showing you an example here. We'll talk about that part in just a moment here. So I stand to make $25 on this if it stayed in the range. It did not. So do I want to just let it keep going and going and going and going and lose a whole $75? Or do I want to exit this trade when it hits my strike? That way I know I risked 25 to potentially make 25. Okay? Same scenario down here. All right? I bought it for 75 bucks with a potential to make 100, for it to be worth 100 and therefore make 25. If the market had come down and hit my strike, I would have closed it at around 50. Okay, so I would end up losing 25, but have a potential gain of 25. But if they both win, meaning if they both expire in the middle, then I stand to profit $50. Okay, so yes, so I would, if the market hit one of these, I would close it out at 50, okay, to minimize my loss. At the same exact time, I'm also going to close out this side. But this side's going to have profit in it, isn't it? Because remember, I got into this trade kind of here in the middle. So when this market goes up, 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 remember, I bought it, for about the $75 range. But as the market went up, 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 I can probably get out of it for 87 or 90 bucks, and make $12, $15 on it. All right. So in reality, I've probably made $12, $15 on this side, right? Everybody agree on this side here? But I was down 25 on this side. So what am I really down in the end? $10, $12, $15 on this trade? Does that make sense? But I would have potentially, had the market stayed in the range, I would have potentially made $50. Okay? Is everybody following so far? Now some of you say, well, if it's going up, Why not just leave this trade open and get the whole 25? Right? Some of you are thinking that. Well, what happens if the market comes up here and hits this and you close it out for a $25 loss? Then the market comes all the way down here, ranging, and hits this one, and you close that one out for a $25 loss. You're down 50 bucks, right? We don't want to do that. If the market is busting out here, okay, we want to exit when it hits this side, and let's exit the other one as well to lock in the, the most we can from this side, and potentially only end up in this trade with $10, $12, $15 loss, and move on to the next one with a potential $50 profit. Okay. Mike says, what time frame for these? 20 minutes, hourly, daily? You could do these on any time frame, whether you're doing 20-minute binaries, the intraday binaries or the daily binaries. Okay. It just all depends on exactly what strategy and what chart size you're using to do it with. Okay. I don't personally do a ton of dailies on it. I do myself personally more 20-minute or hourly binaries. Okay, because a market might be range bound right now and over the next hour, but I don't always know if it's going to be range bound for the next 8 hours all day long, right? It can break out. So does everybody understand the basics of that strategy? Okay, that we're selling it into the money binary, we're buying it into the money binary. Okay, and we're wanting it to expire in the middle. And we want to risk about, 75 on each side with a potential profit of 25 on each side. And if the market hits one of the other sides, we close it out at 50, and then we close out the other side for profit. Now, do we want to just be slapping these on all day long, every 20 minutes, every hour? Well, is this right here a range-bound market? Right here? Or is that a trending market? If you went every 20 minutes and slapped on range-bound binary, you're going to get hit, right? Yeah, that's a trending market. We're not looking to trade this particular strategy in a trending market, right? We're only looking to trade this strategy in a range-bound market or flat markets, when the markets aren't really moving. Okay, we've all seen those days. We've all had those times. We're not looking for, breakout days or volatile days. We're looking in flat, non-trending markets. Okay, so how do you find some of those? Well, there's different ways you can find those. Some of you can just simply spot them and see them yourself, right? It's not hard to go back on a chart and say that was trending. That's, kind of choppy or range bound. Or, you can go back and see some of these very easily yourself. And, what is that? That's a range-bound market right there, right? Choppy or range-bound market. You can draw a box around it. You can see it starting to form back in here, right? Okay, I see that forming there. I can draw a box. You can very easily see that. A couple of the tools that we use over at Apex, these are some Apex proprietary tools. Are a couple things. First of all, see these boxes right here, okay? And then see this next box right here, and then this next box. That's what we call our expected range indicator, okay? Each one of those boxes is drawing like a 20-minute range, and it plots forward, okay? And what this does is tell us from the top to the bottom, looking back historically, this week of the month, or this month of the year, this week of the month, this day of the week, this hour of the day, this minute of the hour, what's the expected historical movement of the market? Okay, and historically, based on the average, the market doesn't go higher than this level for this next 20-minute period, or lower than this level for that next 20-minute period. Okay, it draws that forward for us, okay, on 20-minute time frames, 10 hour, like whatever we set it to. We can see what's the expected range of the market. Okay. Also, So what do we see here in like these few examples? We see, and if you could see further to the left side of the chart, you would have seen the market keeps staying within these ranges. Even here, you see it staying in that range box, staying in that range box, staying in that range box. Here, it happens to break out of the range box. But back during these time periods, it was staying within these range boxes. Okay. I was also starting to see, let me show you another example here. Okay. Our expected volume. Okay, our expected volume indicator kind of shows us when, what is the expected level of volume compared to what is the actual volume. Is it high or is it low? Notice right here, this yellow line tells us where volume is expected to be. And right here, you can see it's underneath that range. It's not even hitting expectations. Okay. Look at when this breakout happened. When the market broke out of the expected range box, what was volume doing? See that? We see volume hitting. Okay, does that make sense? You can see that. So those are some different ways that we look at the markets as well. Is it staying within our expected ranges? Do we have higher or lower expected volume? Okay, so there's plenty of different ways that you can look at excuse me, that you can look at those. All right. See here, very volatile markets. You see that? Like the markets are staying inside these boxes, but what are they doing? They're coming up towards the top of the boxes and coming down to the bottom, coming up to the top, coming to the bottom. And you see how this volume is exceeding? You see that? This yellow line is where we expect volume to be. But then notice the blue is showing the volume's actually higher than expected. So when the volume is higher than expected, that means what? Volatile, right? So I'm not looking to trade this strategy during volatility. I don't want to trade this strategy when I see high volume. I don't want to trade it. Granted, even though the market is staying within these boxes, I notice that it's coming down to the bottom of a box, coming up towards the top, coming down. That's a volatile market. Does that make sense? Look at this. What do you see different right here on the expected volume? Do you see the blue current volume blowing past the expectation? Do you see high, crazy volume? Or do you see a lot of lower than expected volume? Or right at expectations? Do y'all see the difference in those two charts? Do you see where this blue is blowing past the expectation of the market compared to this chart where it's not even always hardly hitting the expected? Well, also, do you notice here, see the boxes again? Is the market jumping up to the top of a box and down to the bottom of a box and up to the top, or is it kind of staying in the middle of these boxes? See that? Can you guys see those examples, differences on this chart? Here, where the market's blowing up, coming down to a bottom, coming up to a top, coming down to a bottom, coming up to a top, coming down to a bottom, blowing out. It's really testing those levels, and the volume is crazier. See the difference there? Do I want to be doing this range bound strategy if I see this huge volume and I see touching these edges of expectation? No. But if I see this, where it's kind of just flat in the middle of these ranges, and it's not beating expectation, in fact, there's times it's not even meeting them, then I might be looking to do what? Draw my box. Remember, that was kind of the example I did for you over here of, hey, it's market's ranging here. Can I get a strike up here and one down here? Close to the edges of those ranges and let the market do its thing and expire in the middle. Okay? Does that make sense? Yeah, Kevin says sometimes it's hard to get those exact prices, especially close to expiration. Yeah, sometimes, Kevin, you do have to, again, depends on what you're trading. You can look at the 20 minutes, the hourly, or the dailies. Like I said, I don't normally trade the dailies, and when I say that, let me clarify. Meaning I don't normally, you know, at 8 or 9, 9 something in the morning, get into a daily binary. Doesn't mean that later on at 2 in the afternoon or 1 in the afternoon, I might not choose a daily. Okay, but I'm looking at smaller time frames of what is the market doing right now? What has it been doing the last little bit? And then what does my expected range tell me for the next 20 minutes or hour or, 2 hours? So sometimes you do have to go a little bit further out. Like you said, especially right close to expiration, you may not find that perfect strike where you need it for that price. You may have to go a little further out. Okay? So no matter what tools you use to determine what's going on with the market, okay? For this strategy, you need a range-bound market. You want to look for the market staying within a range with within some expected ranges. You don't want to see crazy volatility with volume. You want to see lower volume, okay? And you want to make sure that you follow your rules. You exit at the strike if it goes against you, okay? And you exit, for approximately 50 bucks, okay? Again, don't take these blindly. Have a reason to take them. Look at CHOP, look at news, look at volume. Don't get into one of these trades right before a big news event's coming out, okay? Don't just take these trades because, oh, that's really cool, I can just slap those on. No. You have to have a reason to take them. You have to know and see that the market is range bound. Okay, guys, like I told you in the beginning of the webinar, again, major props and kudos to Nadex once again for all the education and tools they provide you. This is just another great example of why you need to take advantage of getting a Nadex demo account. That way you can start practicing and testing this particular strategy in your demo account. Okay, again, don't just jump to this and start throwing on these live trades. Test these in some demo accounts. Learn to read the live markets. Check them out in demo, master them in demo, become profitable with them in demo, and then hop on over to your live account. You can also visit us at apexinvesting.com, and we have a ton of free education over there, step-by-step binary courses, strategy systems, all kind of great information. If there's anything we can do for you, feel free to let us know. Also, make sure to hop back over to nadex.com, and just once again, if you hop on over to Nadex and you go right up here to Learning Center, the webinars tab right here will show you any upcoming webinars, and the webinar archives, you can click right here, filter by presenter, Apex Investing Institute. That is where the recordings of these webinars will be, okay? All right, guys, I appreciate your time today. I hope that helped. That was a very basic kind of run through there of how to look at trading range-bound markets. Again, feel free to visit the archive here. We have several other webinars on how to trade range-bound markets, not only with Nadex binaries, but with Nadex spreads. So visit the archive here. Feel free to visit us over at Apex Investing if you have any other questions as well on that strategy. And get signed up for some future webinars. We look forward to seeing you next time. All right, guys. Thank you so much. I appreciate that, Scott. Thank you. Thank you, Craig, Lau, everybody. Have a good rest of your trading day and week. We will see you next time. Bye-bye.